I am Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's February 10th, 2013. Stocks were mixed last week, although the S&P 500 was up again in what's becoming a familiar refrain, with, once again, most of the gain coming on Friday. Now, there's quite a bit of misinformation being thrown around about this in the media, and I don't mean ideological differences. For example, a weekend article in the Wall Street Journal tried to claim that the drop in the December trade deficit reported Friday was another indication of the strengthening U.S. recovery. Well, that comes close to fiction. The reason the trade gap narrowed was because imports fell dramatically in December. That's never a sign of a strengthening economy. In fact, it's the opposite. In this case, though, it could well be just a blip, because there was a week-long strike at two Southern California ports, including the key one of Long Beach. They handled most of the inbound traffic from Asia. You can put all this sort of stuff down to the rising stock market, which I said again last week. The tape creates its own glow, or lack thereof, and can make mundane news seem important and important seem mundane. Take the price of gasoline or heating oil. They've been going up every single day. The media obliges with stories about some refinery shutdown here or a fire there, or a cold day and makes it all sound like a bad break. They'll say oil has been rising because the global economy is getting better, and so, demand must be up. The truth is that the US is practically drowning in its own oil right now. So much so that the price of Canadian oil has fallen to $65 a barrel and taken the Canadian dollar down with it. Those product prices are up because of financial speculation. When stocks get into a bull run, traders like to bet on oil futures because they're leverage bets. Margin requirements in crude oil are only about 10%, so you're getting 10 times the bang for your buck. If the stock market corrected 10 or 20% next month, gasoline prices would crater, and the stories about refinery problems, they would disappear. The truth is, there are always problems with refineries somewhere because it's a dirty, dangerous business. Now, the big event for the week coming up, assuming there's no crazy political news, should be Friday. That's the day monthly options expire. That will probably support stock prices during the week. And I would expect to see 1525 on the S&P 500, currently sitting at 1518. After expiration, we could see a little pullback, a couple of percent, maybe even 3 to 5, though I think it will be small and brief, because this market wants to get to the 1550, 1575 range on the S&P 500 and test the all-time high, and it wants to do it before the end of April. But it's not the economy, it's the market, and a feeling that nothing really bad enough will happen to stop our calendar march. Well, we'll see. I'm Kevin Flynn, and thanks for listening to Avalon's Market Minute.